Have you ever wondered why the value of precious metals like gold and silver seems to dance up and down, sometimes quite dramatically? It can feel a bit like watching a mystery unfold, with prices shifting based on forces that aren't always clear at first glance. The prices of metals are primarily driven by several key economic factors, including the fundamental balance of supply and demand, the overall health of the global economy, prevailing inflation and interest rates, significant geopolitical events, and the strength of major currencies, especially the United States dollar. Understanding the underlying reasons for these shifts is crucial. When demand for a metal outstrips its available supply, prices naturally tend to rise. Conversely, if supply is abundant and demand softens, prices typically fall. Factors like new mining discoveries, recycling efforts, industrial use, and investor sentiment all contribute to this dynamic. For example, during times of economic uncertainty, gold often sees increased demand as a safe haven asset. Furthermore, global economic expansions can boost demand for industrial metals like copper. Inflation can make physical assets more attractive than cash, while rising interest rates make holding interest-bearing assets more appealing than non-yielding metals. So, how can you use this information? By keeping an eye on global economic indicators such as gross domestic product reports, inflation rates, central bank interest rate decisions, and significant international news, you can begin to anticipate potential shifts in metal prices. While you cannot predict exact movements, understanding these relationships allows you to identify trends and evaluate potential risks or opportunities more effectively. One interesting aspect is how different metals react uniquely to these factors. For instance, palladium is heavily influenced by the automotive industry's demand for catalytic converters, making it particularly sensitive to changes in car production and sales. Silver, on the other hand, acts as both a precious metal and an industrial commodity, giving it a dual personality in response to economic forces. This interplay of various economic indicators creates a complex but fascinating market. Ultimately, recognizing these core economic drivers empowers you to make more informed decisions about your metal investments. Instead of being surprised by market changes, you can approach them with a clearer perspective, appreciating the intricate web of forces that shape the value of these timeless assets.